to another video. So today we're going to look at all stocks across the floor. So we're going to look at the Nasdaq 100, the US30 as well as the SNP500 ahead of the Federal Reserve possible interest rate hike tonight. And as always, if you are new to the channel, a sub would be appreciated. And as always, if you enjoy the content, please smash the like button for the YouTube algorithm, and please let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now, the first thing we're going to speak about here is the S&P 500. Now, both the S&P 500, the US30 and the Nasdaq 100 got similar structure and price action happening all across the board. Now, starting here on the monthly time frame on the S&P 500, we can see how the market had printed this information. After the information, you expect a pullback to the neckline before the continuation there as well. And if you also look here, you can see how the market printed this level of resistance, broke above that, came to test it as support got broken, and all of that supports once again turned resistance. Market also printed an equal low, so definitely there's pullback expected on the S&P 500 before the continuation to the downside. Now, from a monthly perspective here on the US30, what do we have? Similar price action. However, we can see how the market is testing and rejecting this strong level of support quite aggressively, and the market also printed this structure that we had over there from a monthly perspective, which we can see the market is pulling back quite aggressively. Now on the Nasdaq 100, what do we have over here? Now, because the market had printed this structural area over there, that also gave us this information that we saw over here. So again, definitely a pullback expected to the neckline before potentially continuing higher. Now, it all depends on what Powell is going to say in his statement tonight. If interest rates are being hiked this month, then we can definitely expect the stocks to continue to fall. If they do not hike the interest rates, then the move to the upside is definitely expected, but we're going to speak about that when we get to the daily time frame. Getting back on the S&P 500 here from a weekly perspective, what do we have? Now, from a weekly perspective, we can see how the market had broken below this very important level of support, and all of that support is now once again turned resistance. So once again, we can definitely expect the pullback that we are looking for. The US30 here on the monthly time frame, on the weekly time frame, also similar price action we have over here. This market also printed the structure that the market is currently testing from a weekly perspective there as well. So it's very important that we monitor the price around this area to look for potential buying opportunities or selling opportunities. Now, the Nasdaq 100 from a weekly perspective printed this overextended information. Now, after overextended information, you expect a pullback to the left leg before the continuation to the downside, and this over here is identified as the left leg. So definitely a pullback into that area before we could potentially see the market continue lower. Now, on the daily time frame on the S&P 500, what do we have? Now, first thing that we can see over here is that the market had printed that area of structure, and here we can currently see the market is now creating new structure with this green candle that is being printed. So that makes the market stuck within a range, basically in a consolidation phase. So as you can see, the market is literally just stuck between that area and this area that it's about to create over here. And this is normally what happens before high impact news gets released. You can definitely expect the market to be stuck in a range over there. Now, here on the US30 here from a daily perspective, we can also see there the market also printed similar structure that we had over there. If you just look left, now you can see how the market had also printed this structure that we had over there. So we can definitely expect the market to potentially move within this phase, again depending on what Powell's going to speak about tonight. The same price action we got here for the Nasdaq 100, the market printed resistance and then found support over here. So definitely a move expected within that area there as well. Now, how do we approach the situation? Now, as traders, we always have to be reactive and not predictive. We have to learn to adapt to the ever-changing market environment. Now, it all depends on what Powell comes out. It all depends on what Powell says tonight. Now, there's two ways that we can approach the situation. Okay, and I'll give you guys both breakdowns. Sorry about that. And I'll give you guys both ways in which you can approach the situation, probably by tomorrow. So that's the one way that we are going to look at doing things, and this is the second way that we are going to look at things. Now there's only one key data that we are waiting for, which is the Federal Reserve. Also, looking at the US 30 over here, we've got the same. We got the same price action happening over here. So I'm just gonna mark that area for us there. So we can also see the same type of move play out over here, either to the upside or to the downside, depending on if Powell does decide to go ahead and raise the interest rates. So again, if he does raise interest rates, then the stock market is going to continue to fall. If he does not raise the interest rates, then we can definitely expect the stock market to continue with a pullback, because we know that stocks in general is way overextended to the downside at the moment, and there's always a pullback expected in the market. Now, one thing that we need to keep in mind, especially with the US 500, now there's a big correlation between the US 500 and the PMI data. Now, if we go back over here to this article over here from Zero Hedge, it says the US services PMI crashes to 18-month low as Omicron strikes. Now I want you to listen to me what I'm saying to you very carefully. There's a positive correlation between the PMI data and the US 500. Now it says here that the analysts were right on direction, but the magnitude was dramatically worse, with manufacturing dropping from 57.7 to 55, worse than the 56.8 that was expected, while services collapsed from a 57.6 to a 50.9, usually worse than the 55.0 expected. So the PMI obviously got worse based off last week's data. Now, if we go over here and look at the unemployment rate, so it says here the insurance unemployment rate. So the uninsurance employment rate basically gives us an indication of what the current unemployment rate is sitting at, depending on how many people file for unemployment claims. So if you look at over here, the advanced number of seasonal adjusted insured unemployment during the week ending in January was 1.635 million, an increase of 84,000 from the previous week's revised level there as well. So there we can see that there's an increase in the unemployment side, well, in terms of the unemployment side there as well. Now earlier I said that there's a direct correlation between the PMI data and the S&P 500. Now the blue line indicates the PMI and the red line indicates the S&P 500. Now you can see as the PMI moves, the S&P 500 follows there as well, and you can see here's a good example. As the PMI started to rise, the S&P 500 rallied with that, and we can see here in December the PMI is starting to fall, and the S&P 500 went along with that. So definitely one thing to keep in mind there as well when we look at this data. When we look at this data as well. Now, if we look at the commitment of traders, so what the big banks and hedge funds and institutions are doing in the market, we can see here based off last week's report how hedge funds, they actually came in and they added plus 3,729 longs, and they closed minus 5,836 short positions. Now, we can obviously expect the S&P 500, well, we could see how this week the market had all these weak rejections. The market has started showing some sign of bullish momentum. However, it's not confirmed yet because of the market waiting for the interest rate hikes to be released. And also, the guys from Wall Street is also just saying Powell that, well, not Powell, Biden, who's in charge, because they were the people that are just literally tanking the market for last week there as well. Now, if we look at the COT data for the Dow Jones, we can see how hedge funds came in and they closed minus 7,779 of their long positions, and also closed minus 238 short positions, showing that they have no interest in investing in the Dow Jones once again. However, we can see how they also started closing short positions, so they are a bit skeptical to understand what the market's going to do this week there as well. The Nasdaq 100 got plus 12,518 longs added, plus 3,583 shorts added. Now, we know that this week a lot of big companies are releasing their quarter earnings. We had Microsoft releasing their earnings yesterday. We've got Tesla coming out tonight at the closing bell, releasing their earnings out as well. So they probably expect these numbers to be quite good, and that's why we can see how they are buying or starting to add buying positions on the Nasdaq. Now, the best way for us as retail traders to approach the situation is we have to always adapt. We have to learn to adapt to the ever-changing market environment. Now, like I said, if Powell does come out tonight and he does start to hike the interest rates, you can definitely expect the market to continue the fall to the downside. If it does not increase the interest rates, then we can definitely look for potential buys across all stocks in the market, not all stocks, but the ones that we were speaking about now. So the best thing to do is just to sit on our hands, wait for tonight to come, and let's see exactly what Powell has got up his sleeves. And also remember one thing, if Powell does come out tonight and start hiking interest rates, like I said the last time, the market's obviously going to be very skeptical in why they are hiking interest rates earlier than expected, and they would think that something's probably not right, and that would definitely send the stock market for a fall, but people will quickly buy that price up at a lower price because they would know that there is something lurking in the dark for the US dollar, and things are probably worse than Powell has been telling us in the past couple of months that has been speaking about inflation, because we know inflation is at a sky high at the is at a sky high at the moment. So the only way to find the balance between the two is to hike the interest rates to get to an area of imbalance. So that's all from my side, guys. Thank you for your time. Thank you for taking out the time to watch this video. And as always, cheers for ears.